Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Analysts and investors are looking at the unfolding trade war skirmishes through different lenses. The week ahead will be dominated for us by the 2025-26 government budget announcements on Thursday, and before that the RBA rate decision tomorrow. Important in the background will be the bond vigilantes and their global assessments of risk premiums. While all this is going on, the May PMIs will come through for most major economies. A number of countries will release their April CPI data too. And we'll keep a close eye on Chinese data releases later today, including for retail sales, industrial production, house prices, and foreign direct investment levels. And Chinese demand will have an influence on Wednesday's full dairy auction as well. But first today we should note that equity analysts are changing their tune, but it's not clear yet that investors are following them. Globally, first quarter 2025 earnings have been good, with widespread results that beat forecasts. But for an increasing number of analysts, those good recent results are being dismissed, because now they want to know how companies will fare in the second quarter and ahead of world trade disruption, sagging in sentiment and higher costs. Stagflation offers few places to hide. The separate views between analysts and investors will probably be clearest in the world's largest economy. Influential analysts at Moody's credit rating service are worried and have joined S&P and Fitch in a notable downgrade over the weekend of the US sovereign credit rating. That followed news that falling American consumer sentiment is hanging over the global economy. The University of Michigan Consumer Sentiment Index dropped sharply in May from April when analysts had expected a rise. This is the fifth consecutive monthly decline, the lowest reading since June 2022 and the second lowest on record. Hurting was rising inflation expectations, largely around the impact of the tariff taxes. Sentiment is down by a quarter in a year. And retailing giant Walmart is only now starting to roll out tariff price increases, so the pressure on inflation will become even more apparent in the coming months. Current assessments of personal finances in the University of Michigan survey sank nearly 10% on the basis of weakening incomes. Tariff cost fears were spontaneously mentioned by nearly three-quarters of consumers, up from almost 60% in April. Inflation expectations for the year ahead surged to 7.3%, a new all-time high, up from 6.5%, and long-run inflation expectations edged up to 4.6% from 4.4%. Meanwhile, US housing starts stayed at a relatively low level, and that was lower than expected. Given the impact of the tariff taxes, that won't really be any surprise. This is largely why new building consents fell further. Meanwhile, Bloomberg is reporting that the US Fed will trim 2,500 jobs, or about 10% of its workforce, over the next several years. And we should probably note that the Trump tax cut bill failed in a key US House of Representatives committee, mainly because conservative Republicans want greater spending cuts, including to Medicaid programs. In Canada, their senior loan survey of credit conditions tightened for both home loan lending and other lending. Price, that is the expectation of higher interest rates, was a key factor. But for non-mortgage lending, the impact of tariffs was prominent also. In China, later today, we get a big data dump for April activity, which could be revealing on how they have weathered the initial tariff war impacts. And they may say they are best buddies with Russia, but Russia can't afford to buy Chinese cars now and has moved to block imports. It is hard to imagine China being happy with that, because it will kill a trade of over 1 million vehicles annually. Singapore's non-oil exports surged 12% in April from a year ago, far exceeding expectations of a 4% increase and accelerating from a 5.4% rise in March. It is the third consecutive month of export growth there and the fastest pace since last July. There were sharp rises in exports of both electronics and non-electronic products. Although slightly dated now, we can report the Eurozone's trade surplus surged to a record €37 billion in March, up from $23 billion a year earlier, fueled by a sharp rise in exports, particularly to the US, as buyers rushed orders ahead of incoming tariffs. And the US Treasury 10-year yield is now at 4.44%, unchanged from Saturday. And the price of gold will start today at $3,201 an ounce, up $14 from Saturday, but it is down $137 from this time last week. And oil prices are holding today at just over $62.50 a barrel in the US, while international Brent price is still just over $65.50 a barrel, but both are up $1.50 from a week ago. And the Kiwi dollar is now at 58.8 US cents, unchanged from Saturday at this time. Against the Aussie, we're down 10 basis points at 91.8 Australian cents. Against the euro, we're unchanged to 52.7 euro cents. That all means our trade-weighted index starts today still just under 67.4, but up 40 basis points from a week ago. And the Bitcoin price starts today at $105,306 and up 1.3% from Saturday. Volatility of the past 24 hours has been modest at just under plus or minus 1.4%. You can find links to the articles mentioned today in the show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.